The crypto ETF world is exploding. Forget spot Bitcoin ETFs. There are now ETF buffer funds that limit losses while allowing most of the gain. There's yield funds that offer 10 to 50% income. There's options funds. There's 2 times leverage and inverse Bitcoin funds. And there's a lot more. Welcome to ETF Edge. I am your host, Bob Pisani, here to make sense of all of these new Bitcoin and other kinds of crypto ETFs. Ric Edelman, the founder of the Digital Asset Council of Financial Professionals. He's the former head of Edelman Financial Engines. And Rick, it didn't take us very long to go from spot Bitcoin to now we have buffered Bitcoins to leverage and inverse Bitcoins. It makes sense of this explosion of new products. So some of them make sense, and some of them not make sense?
Some do, some don't, Bob. You're right. It was 14 months ago that the SEC said yes to the spot Bitcoin ETFs, and in less than a year they raised $100 billion in investor assets, the fastest growing ETF category ever. When you create that kind of liquidity, you naturally create an options market. Same thing happened in stocks. Not a surprise that it happens in crypto. And now you have an explosion of additional kinds of ETF categories. You mentioned some really exciting ones, buffer ETFs and yield ETFs. You can now invest in Bitcoin ETFs that protect you against the downside volatility while preserving your ability to enjoy the upside profits. Columos, Innovator are 2 leading ETF companies that do these kinds of things. You also have the ability to generate yield off of Bitcoin now, thanks to these covered call writing ETFs, just like you have in the stock market. And because the out-of-the-money calls are so extreme, you can generate massive amounts of yield, much more than you can in the stock market.
Yeah, so there's funds that generate income through covered call writing. We've had these for a while. This is similar to the S&P 500 funds.
Exactly.
JEPI, for example, which writes covered calls and you collect income on them. Grayscale has one, BTCC, Roundhill has them as well. What's the downside, though? You're limiting, you're selling calls, right?
Sure, so the downside is you're limiting your upside, but considering that the upside is predictably so high for crypto, limiting yourself to a 50% gain, that doesn't seem to be too bad a deal to me.
Yeah, and you can go long and short Bitcoin now. You pay some very steep fees here, but look at some of these ones. The volatility shares, 2x Bitcoin strategy, BITX is out there. I have problems with leverage and inverse. You know this. Yeah. 1.8% fees. There's a daily reset that people have a hard time wrapping their heads around.
Most folks don't even realize what that really means, Bob, and this is the biggest issue that we both share this concern about. These ETFs, these inverse ETFs, these leverage ETFs often have an assumption you're going to hold the fund for a single day, a daily reset. That's literally the same thing as buying a lottery ticket. This isn't investing. This is pure speculating, like buying a ridiculous speculative thing, and it isn't something that most ordinary investors should go anywhere near.
Right. And all of this erodes returns over time. High fees, daily reset, something like that. I guess the good news here is there's now very easy ways to allocate money to crypto, and for advisors, it's fully compliant. You're in an ETF format, right?
Exactly right.
The bad news is these are very complex products. You got very high fees, and you have very high risk. Right? I mean,
it's the same thing as you have in the stock market. You have some pretty secure, understandable, low-cost ways like S&P 500 funds, and then you've got funds that invest in penny stocks on an inverse leverage basis. So like in any investment category, you've got to do your due diligence. You have to make sure you understand what you're investing in. Avoid the get-rich-quick nonsense. Crypto is meant to be a long-term hold, just like the stock market. It's meant to diversify the portfolio, just like the stock market. And if you try to engage in a get-rich-quick, I'm going to make money on a free, risk-free basis, chances are you're going to get what you deserve.
It sounds like the same thing as investing in the stock market, essentially. You sound essentially like Jack Bogle investing in index funds.
And the difference,
you want to speculate, here it is, but you're probably going to lose money long term.
And on the other hand, if you recognize that portfolio diversification, portfolio rebalancing, dollar cost averaging, tax loss harvesting, all of this applies to investing, and crypto should be a part of that.
You have been an advocate of long-term index investor for decades, saying the average investor is better off in low-cost indexing for both stocks and bonds. You've also been a big advocate for crypto for a while. What is the argument that crypto should be a part of your overall investing portfolio, and how much? I know it depends on age groups, but give some advice. What are you telling your clients now?
Well, I'll give you 2 pieces of this. Number one, Bitcoin clearly over the past 15 years of its existence has been the best performing asset class in history, bar none. It is widely expected to continue that track record over the next 10 years. So on an attitude of trying to create wealth long term, crypto makes a lot of sense. Second, most importantly from an investment advisor's perspective, Bitcoin's price movements are independent of all other asset classes. The prices don't move in sync with stocks or bonds or real estate or gold or oil or commodities, and that makes it a perfect addition to a diversified portfolio. If you engage in rebalancing, which all investors ought to do periodically, owning Bitcoin helps to lower the risk of the portfolio while improving the returns. A risk-adjusted profile is one of the big claims to fame of adding Bitcoin to a diversified portfolio.
It's really the big claim for adding to anything. I mean, why do I need a new asset class? Okay, I have stocks, I have bonds, I have a nice fund for short-term money. I have a money market fund, and I have a little bit of gold. Why should I add Bitcoin? Your point is diversification, lower volatility, potentially adding to the returns. Those are good reasons.
That's all there is to it. In other words, if you believe in modern portfolio theory, if you believe in Harry Markowitz and his Nobel Prize-winning research that says investing is as much about risk as return, we want to manage that risk. We want to diversify so that we don't have 12 eggs in one basket. We have 12 eggs in 12 baskets. Well, if I can add a new basket, if I can further diversify my risks to protect myself on the downside while preserving my potential for upside, why wouldn't I want to add the newest asset class, the first one to be invented in 170 years? Last time we had a new asset class was the discovery of oil in the 1850s. This is a wonderful opportunity to further improve the diversification, and all the academic data tells us.
And what percentage are you advising at this point?
Most are recommending in low single digits, 2, 3, 4, 5% allocations. But if you talk to people who are deep into crypto, they're doing between 10 and 40% allocations to crypto.
Yeah, it's a lot of risk there. Considering the volatility of crypto, it's a lot of risk.
If you recognize the investment potential, you recognize the value of rebalancing, and you can afford the volatility in the long term, it can make a lot of sense.